Hey everybody, David here, and welcome to the ASOG podcast. In this episode, we are joined by Demarest of Paar, Melis and Associates, an accounting firm that specializes in the automotive industry. If you currently have an accountant and you don't know what questions you should be asking, you don't want to miss this episode. If you don't have an accountant, you're going to find out why you need one. Before we get started, make sure that you're subscribed to the podcast so you never miss an episode. We're on every single podcast listening app. If you're checking us out on YouTube, make sure you subscribe to the channel, like this video, and leave a comment. It helps spread the word. And here we go.
So in all seriousness, David and I both sat through your class at Vision this year, and really enjoyed it. And some of the things that I kind of took away from it were that, a lot of us shop owners just aren't where we need to be with our financials yet. Have you noticed that when you talk to shop owners these days?
For sure. Yeah. I mean, there's a lot of people that, were able to run without those for a while. If things are going good, then a lot of people don't even really care about them. But then when things start going south, they got to figure out why, right. And they don't even know where to start.
Exactly. And that's kind of where I found myself at one point in time was I said, I have no money, right? When we have money in the checking account, it's really easy to say, man, we're doing good. We're doing really good. When that's gone, all of a sudden you need to be able to tell where it went. And David's got some things that he has some questions about. So we're going to let David talk about that. But I do want you to cover one little topic. Mm-hmm. And if David thinks that we should edit it out, we'll edit it out. But I want to cover one little topic because I think it's really important to those who may be listening. You said something really interesting about how you almost automate the savings process. Mm-hmm. And I think that was really cool for me because I came back and implemented that really quickly and said, hey, let's just start doing this. And I'd like you to share a little bit about how you recommend to shop owners to start a savings account and why it's so important that they begin to put some money back.
Yeah. And so, really the biggest thing that we need to do when we start a savings account is we need to set up something that is just going to be second nature, something that's going to be repeatable, something that is going to be manageable for our business. Really what ends up happening when anyone wants to start up a savings account is no one ever wants to do it when things are going well because more money is going to come in the next day, right? Hey, we're killing it. We're as busy as we ever been. Kind of a great example is right now, right? Most shops across the country are just killing it. But then what happens is, profit doesn't pay the bills. Profit doesn't pay our employees. Profit doesn't pay the parts vendors. Cash does. And the only way to, keep the cash is to set it aside to make sure that we're not spending it. And so what I recommend people to do is really you got two ways that you can do this. You can either say, I'm going to do a certain percentage of my sales every single week. So that'll obviously ramp up or ramp down based on how good you're doing that week in sales. Or you can do, hey, I'm just going to do a flat dollar amount. I'm going to do $50. I'm going to do $100. I'm going to do $200. But really the biggest pitfall that I see in this, and I get people that get jacked up all the time and they say, all right, I'm going to do that. We're really making money. I'm going to start putting away $500 a week. For some shops, maybe that's, going to be nothing. You won't even see a blip on the radar, but sometimes that's too much money. And what ends up happening is you do it for a week, you do it for 2 weeks, and then the third week comes. Hey, we're a little bit slow this week. I'm not going to do my transfer this week. I'm going to do it the following week. I'll catch up. I'll do double. And then what ends up happening is we get off of the groove, we don't end up doing it and it just completely goes out the window. And so what I like to do is it seems silly, but start small. Start with something that you're literally never going to notice. And so start with $20, start with $50, start with $100. And it just comes out every single Friday, every single Monday morning, however you want to do it. And then as you go on, it's going to be just kind of going in the background. And then if we're going at 100, we crank it up, we do 150. We do 200 and we just kind of grow with it so that we can know that this is going to be a repeatable process. Right. Same thing with a percentage, you got to be, conscientious of how much your profit margin is, or at least know what your profit margin is if you're going to get into the percentage type game. But same idea. Hey, I got some people that do it a lot of times for sales tax. So if you're in a state with got 6% sales tax, I have a lot of my clients that do 10% of their sales every week go into their sales tax account. The following month, when they go to pay their sales tax, obviously the money's already going to be there. But over and above that, they're also building their savings account in there as well.
Right.
It's a huge thing because cash flow, other than, technician shortage, cash flow is the number one complaint I hear from shop owners.
Right.
It's really hard to run a business. You're worried about holding checks, bouncing checks, or I'm getting behind on this. And, God forbid you get into one of these kind of crunch situations and you go out and get an advance me loan or, one of these credit card advance type things. And it's just a really, really slippery slope.
And I think that was kind of what I took back from our conversations, or hearing your training, and then David and I sat in the back of the room and talked about it. And so what I did when I came back is I just took my shop supplies and averaged them out and said, this is my average shop supplies. And just like I do my labor GP, I've got a reminder on my phone that pops up every couple of weeks, and it reminds me to go back and check my labor GP and check my shop supplies amounts and see if they average out to basically what I'm depositing once a week. Right. And
Awesome.
Basically my shop supplies, I want to say I'm like 8% right now, 7-8% of the total ticket. So when I see that come in, I know beyond a shadow of a doubt that, hey, I'm putting this much in accordance with sales back. And it was just something that kind of stuck with me. It was a reminder. It was something that I felt was really important. So more than anything, I wanted to say thank you for that, because currently I have $25,000 in my savings account when I've never had a savings account. So that worked really well for me.
We can work something out.
Because I need to borrow $24,000.
Yeah, and I need 1,000. So,
yeah, I mean, look, I came on your podcast. You guys were just like blabbering the whole time, and look, that's good, man.
So,
but yeah, I mean, that's awesome.
Thank you.
So you're okay with starting small, even if it's $50 a week, something.
Yeah, you got to start somewhere. I mean, you got to realize that, if you look at, I think the American population, less than 5% of people have any sort of savings account. And I think really, unfortunately, small businesses are no different, but they actually have a lot more monthly expenses than the average American. And so, I like the idea of, if you're going to go 0 to 1,000 and start doing it, that's great. But what we're trying to do is we're trying to create a habit here, and we're trying to create something that we're going to be able to build off of. If you go too aggressive on it, you're just going to shoot yourself in the foot.
Yeah, you'll have to dip into it pretty quickly.
Yeah, and that should be really a one-way street. I mean, really what we're doing is we are building up money for the rainy day, for, in better terms. I mean, shit happens, right? Stuff comes up, stuff breaks, a car breaks, tax bill comes up, a tax audit comes up. And what we're trying to do is we're trying to move this from a position that if I have an unexpected expense, instead of me dipping into credit lines, credit cards, something like that, I'm dipping into my reserves. It's never nice to do because, just like Lucas was saying, I got 25 grand in there. We're planning to have that and save it, put that away. But then if something does come up, we have a safety net to fall back on.
Absolutely. And I think it takes a lot of stress off the owner, right? Knowing that that's there. Now, I chose to go to a different bank that I typically don't drive by. I typically don't see this bank, and I don't bank there otherwise aside from this. And that's because, I have poor money management skills, right? I'm your conventional shop owner. I would buy tools within a heartbeat. So I had to go and set some stuff in place for myself that says, you're not going to touch that.
Yeah, and it's also you're building relationships. It's one of the stuff that we teach is a lot of times, in this day and age, if you really wanted to, Lucas, you could transfer that to anywhere, right? You could transfer it to your other account. You could transfer it across the world. But a lot of times what we're doing too is we're also building relationships. Now we have relationships with 2 different banks. And so if we need to get a auto loan, if we want to get a credit line, if we want to get something, banks are always more apt to deal with people than their existing customers. They have a relationship, they know you, they've seen your track record, they've seen what you've been doing. And so if we have those 2 options, instead of just going to bank A and saying, hey, I want to get a credit line, to come back and say it's 6%. If you have no other relationships, you're not going to go out of your way to try and just shop this around. You probably say, thanks, I'll just take it. Versus if we have these relationships set up that, if you're getting good business from bank A, fine. But, if you need a second opinion, I go to the bank that I have my credit, that I have my savings account with and say, hey, what can you guys do for me?
Right.
In a time like this year, that was huge because I had a ton of shops that, their bank wasn't doing PPP, and people got into a really weird situation because banks were only doing PPP loans with people that had existing accounts. And so I had a couple clients that really got saved by that because they're like, hey, I just so happen to have, some of my, credit accounts or some of my savings account over in this other bank, and they were able to get this thing done for me.
That is a very awesome point. And I think that just like, with us, if we're working with shops that we have relationships with, we're far more apt to help them or go out of our way to help somebody if we've already got an existing relationship. So I think that's a very valid point. So I really appreciate you sharing that with us. Now, David, you had tax questions. And your exact words is, oh no, I'm going to owe them money and I have no clue about taxes. Wasn't that what you said?
No, not exactly.
Okay.
Hey, let me ask you this. Hold on. Before you get off on this topic here. Just real quick, Hunt. So I'm sure you see all sorts when looking over financials. Do you ever run into a shop that has been doing just fine? Maybe they have a little bit of a savings account, but they haven't been actively managing their finances. They haven't been using an accounting service or anything like that. And so now they're approaching retirement, or they're getting close to retirement. And have you ever run into a situation where you look over somebody's financials and you go, man, you haven't been saving for retirement. You haven't put together anything for the future. And a lot of times shops will just bank on selling the business, and that's their retirement, or they got the mortgage cheap enough that they'll be able to flip the land or have somebody come in and buy them out, and that's what they're going to use as their retirement, but they haven't been putting together any savings. And maybe you do look at their financials and say, man, you've been overpaying on your taxes every single year.
Yeah, I mean, you got a couple things in there, and you hit the nail on the head on a lot of what you see. I mean, you've probably talked to those shop owners. You probably know them. I mean, I hear people all the time, if we're talking about tax planning, are we talking about anything like that? Hey, you have any sort of retirement? No, why would I have retirement? My business is my retirement. I hear that all the time. But in actuality, in rough numbers, if you want to look at it, what you're going to be able to get for just your shop, let's not include real estate, just the actual shop is about 3 times what you make in 1 year. And so you tell me if you think that you would have enough money to retire if you just multiplied whatever you made this year times 3. Most people, that's not a significant enough retirement account for them. And that's just not going to get them the lifestyle that they want. So you're either forced to stay in there, you're forced to sell the shop and to get a job somewhere else. So yeah, I mean, I definitely see that.
But that's the ideal as well, right?
What?
3 times is the ideal.
3 times the ideal for sure. Yeah. And that's a situation where you want to sell, right? You have time to wait. You have time to find a right buyer, but I've seen plenty of distressed sales. I mean, I was just talking to a shop today who he's going to buy a shop from another guy who's kind of retiring / getting forced to retire. And he's pretty much getting no value for his business. And he's just buying a real estate, and the real estate's pretty cheap too. So yeah, I mean, anytime we can get ahead on that, it's huge.
I've got to ask, right? Because I've never really thought much about retirement. We always talk about what are the 3 things that you might bring to the table, or the 3 actionable items. If a shop owner's listening right now and has no retirement, where do they start? What's the next step?
So the next step is just like kind of how we referenced and we were talking about, we're talking about a savings account. Let's start at a manageable level. If we're starting with no retirement, most people are living on whatever income they have, and, don't have the money to say, hey, I'm going to set $1,000 aside for my retirement, because we got to think about retirement. Retirement's a one-way street. I put that money in, I deposit that. I'm not getting that money out until I've hit full retirement age. You can take it out before that, but you're going to get killed on it. But really, if we're going to break it down, the natural progression of what retirement looks like is, if you have no retirement set up right now, go out and set up a traditional IRA. You can go through, any bank will do it. You can look online, E-Trade, all kinds of stuff do these. They're extremely easy to set up. It does not need to be done through your business. You can literally contribute this money, after the fact, whenever you want to do. It's about $6,000 deduction per year that you can get. If you are married, your wife can do the same $6,000 as well. That's a pretty good start on there. And then once we have people where they maximize that and they want to go do something over and above that, that's where we go to something like a simple IRA. The simple IRA, where that's a little bit different than a traditional IRA, is that simple IRA has to be done in the business. You also have to offer it to your employees. And so there could be, a bit of a cost associated with doing a match for your employees. It's not going to be a hateful amount. At most, it's going to be 3% of their wages. And that's if they were even contributing that much into their retirement, which most of them honestly won't. And for those that are contributing to retirement, I think it's an incredible benefit to offer to our team. In this market where, finding good help is so hard, any little benefit that we can offer is going to be huge and give us a leg up on our competition.
So hold on. Break this down though. Break this down because I want to make sure people capture this. So you've started a traditional IRA. You're pulling that money out of your gross income. Personal gross income, right? Which is lowering your tax liability, right? Okay, so we have that. We can lower our taxable income by $6,000, and if we're married, $12,000 for both of us.
Correct. Yep.
But now we've maxed that out. We can't put any more money in there without, and we won't incur any further tax benefits for doing so. The next step is let's integrate it into the business. And so let's say a shop owner's, make the numbers simple. Shop owner's paying himself $100,000 a year. And let's just say that's a salary or whatever, right? $100,000 a year. What would that look like in setting up an IRA? How would they be paying into the IRA? Is it, pre-tax dollars? Kind of flesh that out a little bit.
Cool. And so a traditional IRA is done on a personal level. And so you're paying it with dollars, just like either from your paycheck, either from distributions from your business, either from your personal finances. And so you're just paying it just like it's any other bill. And then where you pick up that deduction is at the end of the year. It gets deducted on your tax return. If you're making $100,000, if your adjusted gross income is $100,000, contributing $6,000 is probably going to save you about $1,000 in taxes.
Nice. Okay. So and we've maximized that now. Now we're in the business because we want to continue to contribute to our retirement, but we want to integrate it into the gross revenue from the business. Is that where the benefit is?
So the benefit of going to a simple IRA is the amount that you can contribute is much more. And so it's about $13,500 a year. So $13,500 per person. So again, if we're talking about a couple here, that's $27,000 that you can contribute. That would just get deducted out of your paycheck. Whether you want to increase your payroll so that you still have the same take-home pay, or if you just are saying, hey, you know what, you can take some of my paycheck right now and I'm going to contribute that. That's going to get us up to a pretty good amount. And that's the simple IRA is where I see most shops. We can get into the 401k, but that's, if you want to put $30,000, $40,000, $50,000, that's when you graduate into that level. A 401k can do a ton.
So
go ahead.
My entire interest in this is in the tax benefits. I have a moral objection to paying taxes. So, how do we? Is that 13.5 going to lower my tax liability?
Yeah, it is. So same thing. It's just like you were going out and you were writing a check to the Snap-on guy for tools. It's going to be 100% write-off for you, businessly, personally, however you want to look at it. And, it's really the best deduction out there because we're getting the deduction for literally putting money in our own pocket.
Yeah, that's awesome. Okay. So, and then if we need to graduate to larger dollar amounts, we move into a 401k. Well, what's the difference? Because I don't know. I'm asking here. I thought that I had more flexibility within an IRA, that I could buy different products or any product I wanted to, where you're sort of locked in with a 401k as to what you can offer to your employees, but really just for personally what you can purchase. What is that? What's the difference in that structure?
Yeah, and so, I mean, right off the bat, the biggest structure between a simple IRA and a 401k is the fees associated with it. And so you won't really see the fees, but they're happening on the back end. Average annual fees of running a 401k are, a couple $1,000s, $2,000 to $3,000 and even up if it gets bigger. A simple IRA has virtually no fees. And a lot of people are saying, well, I'm not paying money on the fees, but they're taking all of our returns on there. As far as being able to diversify this and stuff like that, it really depends on who you get your simple IRA from. Generally, most of these simple IRAs and 401ks, they're all in just mutual funds, like target date mutual funds. If you set one up, David, and you want to retire in 2040, they're going to say, I'm going to put David in a 2040 fund. The longer out, the more aggressive it is. If you want to play with the money and you want to kind of get creative on it, you could do a self-directed IRA. There's a lot of people out there that sell those. The reason that a lot of people don't sell those is because sometimes we are our own worst enemies here. We don't want to get we don't want to get super aggressive on really a lot of this stuff because, we're trying to get return here, but we're also trying to make sure that we're not losing it either.
Well, so let me ask you this. One of the things that we always see is that shop owners will hear something like this and they'll fail to take action on it. They don't know where to go next. Now, you're saying the basic IRA they can go to their bank and get, right? Mm-hmm. The simple IRA, is that the same process? Do you recommend talking to somebody such as an accountant? Do they call you and say, hey, Hunt, here's what I want to do? What's the next step?
So the biggest thing on that is both the traditional IRA and the simple IRA. Most, any financial institution have those. There's really nothing that you have to do. There's really no input that you really need from your accountant other than the biggest piece of advice that I will give. And I've seen this happen to way too many shops is you go into a bank, you go into, your credit union, whatever it might be. And someone says, oh, you know what, Lucas, a simple IRA, a traditional IRA is okay, but I really need to put you into a 401k. And I've seen shops time and time again get forced into a 401k because simple IRAs, they have no fees, which means that no one makes any commissions off of it. Right. 401ks have a lot of fees and they have a lot of commissions. So, we see a lot of it with, ADP and Paychex clients that get pressured into having a 401k. So that's the biggest thing. It's really very straightforward to set up. Go talk to them. They'll kind of give you the guidelines, give the employees the guidelines on how it's going to look like going forward.
But I think step one, though, Lucas, is start with the savings. Start sloughing them away as much money. Do it personally and within the business. Mm-hmm. But now, I guess where we are in the conversation is now we're to the point where there is money there. There's healthy cash flow. We're handling our expenses. Now we just need to lower our tax liability to the least amount possible legally. Mm-hmm. And so, let me ask you this, Hunt. Do you get that question a lot? Do you have a lot of shop owners that come in saying, hey, I need to lower my tax liability as much as possible? What kind of advice do you give in order for them to, again, legally do so without overextending themselves? Because you see a lot of shop owners, I will say I typically see a lot of business owners. They get towards the end of the year and they get the phone call from the accountant, says, hey, mm-hmm. you're going to owe a ton in taxes, go buy a truck. And so mm-hmm. they buy a $50,000 truck in order to avoid paying the taxes on it. And I get that. But is that the best way to handle it?
No. I mean, that's a cheap, easy way to do it, right? And so no one likes paying tax. I mean, I literally don't think I've ever met a small business owner that says, hey, you know what? I just don't think I pay enough of my fair share in taxes.
Let me tell you, this is going to play to a lot of parts of the country where people see that their tax bill as a duty to the good of the nation. That I'm not kidding. There are people out there that think it is their duty to pay these tax bills, and so they're like, "Oh, I got to pay my fair share," and
they can skip this part then.
Well, I'm starting to think that this is a lot like a debate. Maybe I should have incorporated a mute button for David because I just feel a David rant coming on. I mean, it's happening. I know it is.
No, I'm not going to get on my soapbox. It's not going to be a thing. I'm looking at well, for me personally, but I understand that there's going to be I'll give you an example. I know there was a shop owner who was absolutely murdering it. He kept his expenses very, very low. He didn't go out and buy a bunch of stupid stuff. He was really cash rich at the end of the year, and his accountant did not do a good job of preparing him for the tax bill. And the tax bill that he all of a sudden got the following year was in the six figures. And he's like, what in the crap? Now, he had been at the very end of the year, he was pulling personal money out because they slowed way down, and he had hired maybe too many people, and they took a bunch of time off, and he's like, I'm going to pay everybody vacation time for 3 weeks. Let's do it. And so he got a little short on cash. And so he pulled out his personal savings to dump back into the business with the idea of eventually paying himself back. But I'm hoping to help shop owners that see themselves in that situation where they're very frugal throughout the year. They tweak their business, and all of a sudden their gross revenues spike and sustain throughout the year, and they have a killer year, 30, 40, 50% increases in gross revenue. They haven't increased their expenses or overhead expenses too much, and now they're sitting on a ton of money. What do they do with that money? And that doesn't involve giving it to the government.
Yeah, and so that's the biggest thing is we need to know what that number is, right? And so we can't be running blind and saying, hey, we had a really good year. What is this going to look like? How much of this am I actually going to keep? We need to be able to get ahead of that. So we say, hey, you know what? Let's sit down, David. Hey, we had a really good year. I think you're going to owe around $40,000 in cash, in tax. And so the first thing we need to look at is we need to say, well, how much cash do I have? Right? Because we can't go out and be spending money to try to minimize the tax bill when that would kind of cut into the money that we need to be paying on taxes. So that's where we start talking about different things that we can do. You can get into the gray areas of, hey, we can run this stuff through the business. Hey, there's a way we can justify that this is a business expense. But we talk about retirement, we talk about doing, trying to defer some of the income. We try to accrue expenses on there. We try to make sure that we can set up the financials in a way that they're going to be taxed the least amount as possible. But at the end of the day, one of the things that I hate hearing is just like what you mentioned before, David, is, well, I'm just going to go out and buy a piece of equipment. I'm going to go out and buy a truck. What I always tell people is, buying equipment, buying trucks, doing major improvements to your property are really good write-offs, right? We can write off the entire amount in the first year, even if you finance this stuff. But at the end of the day, we're still out to cash. And so I'm never going to be a proponent of just going out to buy something just to sheerly save the taxes on it, because we're still way behind as far as cash goes. What I always do is, when I'm talking about minimizing tax, I'm looking at it and I'm saying, hey, if what am I buying? Is it going to generate me money going forward? If the answer to that is yes, and that's a great investment. Even if we weren't going to spend it, if I'm going to go out and get, let's just say like an ATIS machine. Hey, you know what? I'm going to go out and get an ATIS machine. I need to write off. It's a good time to do it. I'm going to start getting into that business next year. Perfect. Let's do it. Something like a truck.
Emphasize that though. I'm sorry to interrupt you, but that was unbelievably powerful. The distinction that you made there, it's not just going out and buying whatever, because if, let's say you do want to avoid paying that $40,000, you could buy the truck and write the whole thing off in the first year. You won't owe the $40,000, but like you said, you made a distinction and said, yeah, you've got a truck. It's a liability. It's going to start depreciating. You're going to have to put money into it, keep it on the road, versus a revenue generating expense like an ADOS machine or an alignment machine or something that will start to produce income for you versus paying the tax.
Mm-hmm. Yeah. And it's also something, it's not always as easy. It's not always as cut and dry as that. Right. But also a lot of times what I say too is, if we were planning on buying this, the first quarter of next year, the first part of next year, we're going to buy this anyways. Let's just accelerate that. And let's just do this at the end of the year. It's even more, it's even less important if you're going to be financing this, because what is a couple months? It's a couple more lease payments, but nothing really major. And anytime that you're going out and really any sort of leases in the auto world are all lease to own. And so as soon as you sign that paperwork, it's essentially like you paid cash for it for tax purposes.
Awesome.
Yeah, that's definitely awesome because I know I spent all my money, so I'm not going to have to pay taxes.
What are some other, you called them gray areas, but it's either legal or it's not. And I'm not talking about pumping personal expenses through the business necessarily. Instead of paying the gym membership out of pocket, you're like, all of a sudden you have a wellness program at the shop and it happens to pay for everybody's gym memberships. What are some other lesser known tactics that somebody can implement if they are seeing healthy cash flow? They are putting money aside. They're building up their reserves. They know that, hey, I've got 3, 4, 5, 6 months of expenses with payroll and taxes set aside, and I'm taking home a good chunk of money. I don't need any more income, personal income that I just have to pay taxes on. What else could a business owner do to, like I said, minimize your tax liability rather than paying, obviously, taxes, other than just those larger expenses, buying equipment? What are some lesser known tactics?
Yeah, obviously there's a gray area stuff like you mentioned. None of that's going to break the bank here. You could shift some of this stuff as, hey, is this a business expense? Is this a personal expense? A lot of times, especially for, small businesses, the line on that is kind of blurred. But it's, unless you go super aggressive on this stuff, you're probably not going to get any sort of major deduction. Really the best, and people ask me this all the time, and they come and they say, well, what are these rich people? These rich people are getting all these tax breaks. I want to do some of that stuff. If you are not maxing out your retirement, then there's no other place to start. That is 100% the best thing right there. If you're maxing out your simple IRA, then that's going to get you probably more deductions and more cash than you can even want. Once you've maxed out that, simple IRA, then we can start talking about other stuff. Hey, then we can start talking about, do we need to pay the kids? Their kids work in the shop. There's a lot of different things that kind of go along with that. Not sure how far down the rabbit hole we want to go, but, I can kind of talk briefly about, the benefits of having the kids on payroll and stuff like that.
So I've got my kids heavily featured in my marketing.
I love that.
With the idea that they're 5 and 7 right now, but I've got to pay for private school. And so we pay them a marketing fee and, for their use of their pictures and videos and whatever else I need them for. And it goes into separate accounts, entirely separate accounts that's in their names. And those accounts are used just to pay for their expenses. Talk about putting family members into the business or incorporating them. I see a lot of shop owners keep that very separated. And, they're like, oh, my wife doesn't get involved in the business at all. My kids are completely out of the business. What kind of tax benefits could they see from just bringing in your wife to do something within the business, or the children if they're under 18? Talk about that a little bit.
Yeah, and so wife is really not going to get us much benefit because you and your wife are going to be filing a joint tax return, so you're really not getting any sort of deduction. You're taking money out of your right pocket, putting it in your left pocket. Where we get the big benefit with the kids, though, is the difference in tax rates. Right? Because just like I said, it doesn't give us any benefit by paying my wife because we pay the same tax rate. So I get a deduction here, income there. But for the kids, let's just give an example. I got 2 twins. They're both 15 years old. They're old enough. They're working in the shop. They're doing something. I'm going to give them both $5,000 on payroll. Going to work out to be about $10,000 that I paid both of them throughout the year. Now, since they make less than $12,000 a year, they're going to owe no income tax. And so we're going to have no withholding for them. Depending on how your business is set up, we still might have to pay some payroll taxes on them. But let's say that we paid them, we got all the payroll taxes taken out. And on the low side, we now have $9,000. So what you need to think about is we now have $9,000 cash, which is good, right? We took money out of the business. But then what you also need to think is that's what you have here in the kids account. What you need to look at is the tax savings that you're going to have on your personal taxes, your business taxes. So now we have a new $10,000 expense on the business, which is going to save us, conservatively another $2,000 in taxes. And so we just, by putting our kids on payroll, spent $10,000 and got $11,000 back. Do you see? Did I make sense on that one? It's kind of a weird idea, but like literally we're making money by doing this.
Yeah. And that most of the time, I mean, these are expenses you're probably paying for. I'm talking about the children now. Mm-hmm. If you're putting the money into an account, it's their money. You're probably putting money into a college savings account already with, you're probably buying them clothes. You're saving up for a car, and you're doing that with post-tax dollars typically.
And now we're switching that and we're doing pre-tax dollars. And so if you want to go even further on that, really, what you can do there is, let's say that we have the kids on there, just like you hit the nail on the head, David. We're not telling anyone out here to just fraudulently put their kids on there. These kids are working, right? Maybe they're child models. Maybe they're, in middle school and they're helping with filing or social media, whatever it might be. And so I'm going to give you two examples. One of a younger kid. We got young kids. We're starting this now. Let's use you, for example, David. We've been paying both of your kids. We're going to get them a couple $1,000s every single year. Instead of putting that into a college savings account, because really the only reason we do a college savings account is to kind of get the tax deduction for it. They don't need the tax deduction. They have no income tax. And so what I'm going to do is I'm going to put that into a Roth IRA. A Roth IRA is, a retirement vehicle, but you can take money in and out. You don't get a tax deduction for it. Now, let's say that your kids are 18 years old. They now have a Roth IRA that has $100,000 in it. If that was in a savings account and they went to apply for college or get financial aid or get student loans or anything like that, if they had a savings account, they would have to report, hey, I have $100,000 of assets. I have $100,000 of cash. They're not going to get any sort of financial aid scholarships or anything like that. However, on all of these financial aid paperwork, they don't ask you how much you have in retirement accounts. So in that same situation, if you've been putting that money into a Roth IRA over the years, we now have $100,000. But as far as the school's concerned, hey, the kids have no money. They don't have anything, and you don't get negatively affected by it.
That is brilliant. I mean, that's just downright brilliant. And I think that's why it's so important to have a glorified professional in your corner. Right. I think that's why it is so important because, I guess I've always looked at my accountant. I take him the paperwork, once a month to do the quarterlies or whatever it is, or I take him the stuff at the end of the year. And that's the end of our conversation. And I think, a lot of shop owners face that same thing. Right. Maybe they try and do their taxes online. Maybe they have an accountant that they pay and they just kind of throw their books together good enough to get their taxes done, and one of the experiences I had is that we were doing our own books, but nobody had ever shown us how to do those properly. Well, the accountant just kept saying, yeah, it's $5,000. It's $5,000 because they were having to clean it up. Mm-hmm. We never realized that was our fault. We were paying as much as we were at the time. Mm-hmm. So I think it's so important to have a professional in your corner because just these couple simple little things could make a huge difference in somebody's life. I mean,
like David said, we're already paying for this stuff too, and
exactly.
So, for that situation, like if you turn around and say, hey, now that David's kids are 18 years old and they're going to college, they're going to be able to pay for their college themselves because we've given them all this money over the years. If you kind of trace that back, effectively what you've done is you were able to write off the expense of your kids' college and your business.
That's fantastic.
In kind of a circular way, but the end result is, 100% legal and, a deduction for the business.
That is fantastic.
And that's the idea here. And this is really why we wanted to have you on, Hunt, is I don't want shop owners to just go to their accountant and, hey, shoot me a P&L and let me know what I owe in taxes, rather than go in and sit down with them and have a deeper conversation of, hey, these are my future goals. This is what I'd like to see my children doing. This is what I'd like to put aside. How do we make that happen with the business's revenue?
Yeah, a lot of times what we need to do is we need to figure out how much cash we have to play with, right? And so if you come to me, David, and you say, hey, I owe $20,000 in cash, but you got stuff tied up. Maybe the winter and the first couple of months of next year are going to be slow. So you're saying I need to keep some of this cash in reserves. Maybe we only have $10,000 to play with. And so a lot of times it's, hey, what's the best bang for our buck that we can get for this money right now? And so that's when we start ranking stuff. Hey, in a perfect world, we have $40,000 that we can do to spend to minimize tax, but we got 10. So let's just prioritize the best ones.
If you go in with a plan, or at least have the basic framework of a discussion to sit down, all of this can get broken down into much smaller bite-sized chunks that can be then spread out throughout the year. This doesn't have to be $40,000. This it can be, $3,500 over the next 12 months. That becomes a lot more manageable. That'll be, over $40,000 by the end of the year, but it doesn't look like $40,000 every single month.
For sure. Yeah, we're just breaking this stuff up. Instead of saying, hey, I'm going to not put anything in retirement, I'm going to put 20 grand at the end of the year. Hey, you know what? Let's do that just like we do the savings account. And every single week, $75 is coming out of my paycheck. I'm bad. I should be able to do that mental math in my head. That doesn't seem like enough. But the idea is a little bit every single week is going to build out to be a lot over the course of the year. And you're not even going to notice it's gone. It's just going to be in the background, doing what we needed to do, lowering our taxes, planning for our future. So.
That's fantastic. Yeah. That really is fantastic.
What about life insurance as a tax haven?
Life insurance as a tax haven is not a good one because life insurance is not a deductible expense. So life insurance, when I say, I should kind of clarify that. So life insurance can be a deductible expense, but if you deduct the money that you pay into the life insurance, that means that the benefits, if you have to use that, if you die, are going to be taxable to whoever gets it. And so almost no one ever deducts life insurance or should not be deducting life insurance because the premiums are so low, we're not getting that much of a benefit. And the tax bill that it could create down the road is massive. So as a tax haven, it just doesn't really work. If you're super, super high income, you've maximized all of your other retirement options. There is different whole life policies and stuff like that you can use to put money away. But that's really just a metric of savings, not really a metric of tax savings by any means.
Brilliant. So, Hunt, let's cover this. One of the things that, and we've kind of talked about it a little bit here, but one of the things that we've really found within ASOG is there's a lot of shop owners who just need a little bit of direction, right? Maybe they can't afford your service. Maybe they can't afford a shop coach. Maybe they don't know where to turn next. And they're trying to improve their business. And, you've got this amazing perspective because you work with primarily shops, right? You're a 1 in a million accountant, right? Mm-hmm. What is it? Name the top 3 things that a shop owner can take away from this conversation this evening and can come back and really do something, really make some positive changes in their business with 3 things. What would those 3 things be?
So the first thing we need to do is we need to get a grasp on our financials. We have some people that we teach them how to use QuickBooks and they're going from old school pen and paper. We have some people that we teach how to use QuickBooks where, they're just doing some sort of hand ledger or something like that. Or a lot of people that just aren't doing anything. They're just running blind. So the first thing that we need to do, because, just like we were referencing before, tax planning is how can we do any of this stuff unless we know where we stand right now? And so that's the first thing. And, anyone out there that says, oh, I'm not an accountant, I don't know how to do this. The most hours of training that we sell for QuickBooks is 5 hours because I can get anyone trained on how to use it as it relates to a shop in 5 hours. And really 5 hours is usually too much. So anyone out there that says, hey, I'm never going to be able to learn this, I don't understand that, it's just not true. It's super, super easy to use. If you do need to pay for training, you could obviously hire me. You could hire other people. There's plenty of training out there, but it's something that you need to do. A number 2 thing on it is, once we get these financials cleaned up, or once we get these financials, just like you were talking about before, Lucas, financials are only as good as the way that they're set up. If Correct. You set these up in a format where it's just completely junk, no one's looking at it, then yeah, we're tracking everything in there, but we're not getting any value out of it. So we need to set this up in a format so that we can use this as a tool for our business. When you first start out, a lot of people don't really rely on the financials, and sometimes it's fine because they're smaller, the expenses are lower, they kind of know what they need to do. And as you start growing bigger and bigger, some of the day-to-day type problems and fixes that you need to do in your shop are going away. and you get to the stage in your business where you're fine tuning this. Hey, I'm making some profit, but I'm not making a ton of profit. And really, when you get to that stage in the business, and like you said, we deal with only shops pretty much, 99% of our clients. And so, looking at the financials of, 600 shops on a monthly basis, the biggest thing that I notice is that the difference between a shop that's just getting by and a shop that is really killing it is not a monstrous difference. It's just little stuff here, little stuff there. But If this stuff is not set up correctly, you're never going to be able to, kind of understand that, right? You can't feel a 5% slip in margins or a 5% slip in your overhead or something like that. You're going to feel at the end of the month, the end of the year in the bank account, but you're never going to really put your finger on why. And so having these things set up, having these set up correctly is huge. And then really the last piece of this is, now that we have them set up correctly, look at them. I don't know how many people I have that have these beautiful financials. We help them with it. And, they'll call me up and they say, well, I just don't have any money. I'm like, well, you're doing the right thing. Call me up, because we're going to talk about it, but I'm going to go back to your numbers. Right. And so we're going to look at this, because the first thing that we need to do, if you say, hey, I have no money, is we need to start looking down. We need to figure out why. This business is a very, straightforward, easy business when you look at it. We have labor, we have parts, we have margins on both of those, and then we have overhead. Really, if you hit those three things, you're going to have a profitable business. But if you're not looking at this stuff, if you're not understanding, if you're not, looking at trends, then, you're just running blind. Again, you might have the financials, but you're still running blind. One of the biggest things that I see on this is, shop owners, we're in a digital age now, right? I feel like that this industry is more and more becoming a tech company or a tech industry. And so a lot of people are relying heavily on their software, whatever shop management software you use, they're in that every single day. That's their world. That's what they're focused on. And those are obviously getting us some pretty good metrics out of there. But all of those metrics in there are what we think we're making. And so if we're looking at that and we think we're making 50% parts margin, if we think our labor margin's 85%, what we need to do is we need to be cross-referencing that with our financials, and we need to be kind of, checking that shop management software to make sure it's running correctly.
Absolutely.
I was just working with a shop the other day, and, he was just kind of, struggling, because he was like, everything is looking good on my end, and I just can't figure out what's going on because I have no money. And so we were looking at his tech metric, and sure enough, the margins look good. Sales look good. He was making about 45% on parts, which isn't too bad, given what he does. But when I looked at it on QuickBooks, he's actually in the negative. He's in the red for parts. He had bought more parts than he had sold this year, because, we're thinking he actually has a theft issue. But see, that's where we got to kind of connect the dots. We need to make sure that the numbers that we think we're running our business off of are real good numbers.
You're absolutely right. And that's the thing, is that when I started working with somebody and we started coming back and saying, oh, wait a minute, hold up, your percentage is a little bit high on parts purchases. Your percentage is a little bit high on labor. I wonder if a paycheck was calculated incorrectly. I want, and watching it on a weekly basis has been huge for me. And look, it took me years to figure out I could customize the P&L and go up there and click percentage of income. Right. And now I've got an idea of what I'm actually looking at. But, I think you bring up some really, really good points. And one of the things that we've noticed within the group is this, and one of our last podcasts was talking about profit. And in that, we kept talking about the fact that folks would say, oh man, my net profit, oh yeah, I absolutely have net 25. And then you'd start to probe and you'd start to ask questions, and you figured out really quickly they either A, didn't understand what net profit was, or B, they were just throwing out an arbitrary number. They didn't actually understand what they had. And I have learned as a business owner that there is no way you're going to hold a net 25 profit without watching your financials frequently, right? You've got to be looking at it daily, weekly, monthly. You've got to be paying attention to this thing, because it only takes just a little bit of extra expenditure. I'm the guy who I get some money in my account and I'm like, oh man, look at that. I'm going to go buy that. Right. And as opposed to flying by that seat of the pants and how much is in the checking account, now I'm watching the P&L and I'm saying, ooh, that's a little bit tight. I need to get that percentage back in line. I don't think that you get to net 25 without watching your numbers. I just don't think that you can accidentally get there.
No, you can't. And, we got some people that can do it, right? If you luck out, or if you just really know how that you run a business, but more than likely, you need to build to that. 25% is a lofty target. We have a number of clients that hit it, but that's not the industry norm. I think that the industry norm is actually into single digits, across the industry on this. But yeah, looking at this stuff and analyzing it, and you don't know how many times I, talk to shops, whether it's a sales call or something like that, or just meeting a new shop. And one of my first questions is just to kind of get an idea on what they're going through. Is just, hey, what did you do last year in sales? And it's really telling right then and there, because you can tell who's kind of in tune to their numbers. I have a lot of people that are like, oh, last year we did about 850, right? I don't care about the exact dollars and cents, but they knew where they stand. I would say 15% of the shops that I talk to, when I ask that question, they can't even give me a ballpark. They just don't know. And I think, to me, that's just such a crazy idea that you would even know some of these, baseline numbers. But like you're talking about, Lucas, as it goes even farther, whether we like it or not, we have to know the numbers. I have to know what my ARO is. I have to know what my margins are. I have to know what my targets are, because if we're setting these targets, if we're setting these goals, I need to be able to analyze this and go back to my team, or look myself in the mirror. Hey, I need to do something. I need to change something to get to my goal. But we can't set goals and we can't measure this stuff if we don't even know where we are to begin with.
Exactly. And you can't delegate that responsibility. Right?
No.
We have to be, as business owners, responsible for those numbers. I can have the best accountant in the world, but if I'm not paying attention to that, if I'm not watching it, and little things. My wife does the bookkeeping, and we'll cross-check each other, and we'll realize a silly little mistake sometimes that makes a huge difference. And if we're not watching that, we don't get the opportunity to fix it. We really see that in the numbers, and I think that so many shop owners say, you know what, I'm just going to fly it by the seat of my pants. That's tough. And one of the things that I've really been passionate about saying is that, the job of owning and managing a repair shop is not the job of working on cars.
No.
It's not the job of selling the service to the customer. It's the job of managing and operating the business. They are two different jobs. And I would much rather see an owner fully engaged in owning and operating the business than I would back here in the back, because that's not where he's most valuable. That's not where he faces the most liability or potential harm. Mm-hmm. It's from that business owner's chair,
Exactly. And I hear this all the time, because, a lot of people in this industry come from, the service side of things. Hey, I was a technician or I was a service advisor, and now I'm owning an own shop. And sometimes old habits die hard, because their way that they think to go and fix the business is, I just need to go back there and do what I need to do, which is turn wrenches, which is sell work. Whereas like you said, Lucas, it's like, what your tools used to be, your hand tools, your scanners, your stuff like that. Your tools now as a business owner, or your financials, are going through this, as understanding this, so that you can really drive the business. And that's how you get real profit. And that's how you turn this into a business versus a high paying job, or in some people's situation, a low paying job.
A low paying job with tons of stress.
A lot of stress.
Right. David,
I see it a lot. I see it a lot. I was talking to my client the other day, and he's kind of on the smaller side, and he's making, $50,000 a year, and he's stressed to the next level. And I say, well, what do you want this business to look like? Let's do it. And he's like, I'm not sure. And I said, well, you got two choices. You can either create a business that you're going to be happy with, or shut the door and go get a job. You can probably, in this market, you can make twice as much, and you can go home at 5:00 and not worry about this stuff, so make a choice.
Absolutely.
But going through these financials and becoming an executive and or acting like an executive and treating it like that within your business is a function of habits. Just like we were talking about at the very beginning, creating that habit of putting money aside every single week or every single month, however much you can, but creating that habit, looking over your financials is no different. It's every single morning, opening up your books, taking a look at whatever numbers you need to look at every single morning or once a week, but creating that habit so you know it becomes strange not to walk into the business and immediately open up your books and start looking at your numbers to see where you're at.
Yeah, for sure.
But here's why, right? Let's be realistic about this. And I can speak from experience. The reason they don't is fear, right?
They don't want to see what's in there.
Exactly. And they don't understand it, right? As from my perspective, I came into this as a technician kind of role, and then I moved to the service advisor, and I've slowly grown to be a business owner. When I looked at the numbers, they didn't make sense. My eyes glassed over and the page ran together. It didn't make sense. Mm-hmm. And I'm somebody who, I can go out to the car and I can look at the car and can smell the way it's running. I can hear the way it's running. I can feel the way it's running, and I can look at the data and I can interpret that and I can do something with it. Mm-hmm. And I think that it's a very, very similar set of skills that allows you to do the same thing with your business, but you have to access those. You have to take time to learn it. It's not that complicated. It's not that hard. And you've got advocates. Hunt, you're an advocate to shop owners. Mm-hmm. There are advocates out there who are willing to spend the time with you and work with you and make your life better. But you've got to ask for that help. You've got to slow down and say, look, I'm going to do this. I have to do this. But I think fear stops so many shop owners from engaging in that experience, because it's a whole lot easier to turn away, walk back into the shop and say, well, I'll just fix more cars. Right.
That's also one of these things too of, just like, you make the reference to working on cars is you didn't just one day just say, hey, you know what, I can just see this and I know what's wrong and I know how to fix it. You built skills over the years and you started out. And when you first started, you didn't know anything and you screwed stuff up and you messed stuff up and you got confused. Financials are no different. When you start getting into it, you're going to be like, I don't even know what I'm looking at. You might even think that even less once you start diving into this stuff. But then, at some point when you start looking at this, I think what really clicks a lot of times for shop owners and really business owners in general is when you're looking at the numbers on the page and you finally get that, you can see how that relates to what you're seeing in real life. Oh, hey, I see on my financials why my labor gross profit margin is low. And you know what? I see how that relates because this month in the shop, we were at 60% productivity. And so once that kind of light bulb goes off where you can kind of see what's going on in real life and see how it's relating to the numbers, not only is that going to get you a much better understanding, but that's also going to kind of, give you a lot of answers to a lot of your problems.
Exactly. And I think it gives you the feeling of control. Right. It gets you to the point that you understand that you can tweak and you can turn and you can move things within your operation to get a desired result. And I think that's why it's so frustrating for shop owners, is because they can go to the car and they can get a desired result. Right. Mm-hmm. And when we go to our financials, if we don't have an understanding of what we're looking at, even base knowledge, when we make a change and we don't see it change there. Right. And I've talked to a lot of shop owners and it's scary to think this, but they'll oftentimes say, I am terrified to look at my numbers and I am I've looked at them. They're not where I need them to be. They're not good. I'm just going to keep doing what I'm doing and I hope things get better. Uh-huh. I hate to tell you, they don't get better until you watch them constantly. Okay? Just like a car, right? You're like, hey, if I just ignore that problem, it'll probably fix itself. That has a 0% success rate. Same with financials.
Well, I hope you enjoyed this episode of the ASOG podcast. If you're listening to us on Apple Podcasts, leave us a review. It would be greatly appreciated. And if you'd like to be a guest on our podcast, or if you have any questions, comments, or concerns, feel free to email me at david@asog.site. That's DAVID@ASOG.SITE. Until next time.